The East Africa region is heavily dependent on agriculture. Soft commodities such as coffee and tea, as well as horticultural products like flowers, are shipped to international markets for consumption.
East Africa is a major exporter of commodities to the world market. And so we see everything from gold in Tanzania, soft commodities, coffee, tea, sugar, which are coming from all the other East African markets, particularly Kenya, and also more recently horticultural goods. Flowers going to the Netherlands, to the UK. I see them on sale every day. They're flown in that day from Kenya. So there's a real surge in terms of exports. The problem is Kenya is very dependent on imports, and it's everything: petroleum products, consumer goods, and that means there is a very large trade deficit, around $24 billion every year.
Despite milestones achieved in this sector, there are still bottlenecks that hinders the sector's full potential, especially in achieving food security.
Of course, technology is important, very, very important to be able to produce more. We're still using the old technology, horse, family labor, and not using enough of agricultural inputs like fertilizer. This is what can make Africa increase production. The more recent technology, most of the world is feeding itself from GMO foods. Africa, we are still debating whether to start or not to start. And GMO foods, I mean, I'm not saying it's correct or it's right, but that's what the world is moving. We need to finish the discussion of how to regulate it, because I think it's inevitable.
On the other hand, hard commodities continue to attract investor interest. More so, recent oil discoveries in the region, which have the prospect of transforming East Africa's economic landscape.
East Africa is not refining any crude at all after the closure of KPRL last year. So the region is 100% dependent on imports of petroleum products. But we would expect the next 5 to 10 years, we've got new refineries in Uganda, potentially with the Lapset project. And we should also start to see up to 200,000 barrels a day of production in this region. We could see a rebirth of the refining sector. And theoretically, within 10 years, the region could be self-sufficient in petroleum product production.
With the extractive sector being capital intensive, what financing options do companies investing in this space have?
If you look at the upstream side, which is where the exploration is happening, commercial banks would not normally fund upstream activity. This would normally be funded through equity. So in as much as banks would want to participate in that sector, it would only be to the extent of perhaps providing funding to the services industry. When you look at the midstream sector, there's a lot of infrastructure development that will be required. If you look at Kenya, there's talk of having a pipeline from the oil fields in Lokicha, like I mentioned, down to Lamu. There's also talk of having interconnecting pipeline from Uganda to the Lokicha area. So it's an area that banks may want to look at.
And turning to agriculture, there are measures that can be established to unleash the sector's full potential.
The first investment, of course, is by government in infrastructure. Building dams, damming water, providing finance, providing infrastructure. The second is then the private sector stepping in and producing what is available. The third one is Africa feeding on what's produced in Africa. We're able to produce cassava, which has no pests, which is only produced in Africa. But what we want to consume Irish potato, which is difficult to produce here because it's not the natural environment. So if Africa grew African foods, processed African foods, ate African foods, there's enough food for Africa.
Experts, however, remain bullish about the commodities sector going forward.
Is very positive in terms of exports of commodities. There's so much demand for African tea, particularly Kenyan tea, coffee. We're seeing real development of the sugar sector, particularly countries like Malawi and Zambia, Ethiopia, Uganda, very successful sugar sectors. Many more problems in Kenya to be addressed there. So certainly on the export front, I think it's very positive for commodities. The big issue here is value addition. We need to be able to come up with models whereby we can actually extract more value from the commodity before it goes to the international market.